Hello and welcome to this final chapter of the Banker Masterclass series, Getting FinTech Right, in association with PPF Group. I'm Kimberly Long, HR to the Banker, and with me today is Emma Hagan, Chief Risk and Compliance Officer at ClearBank, to discuss banking in the cloud. Thanks for joining me, Emma.
Thank you for having me.
What benefits are derived from operating in the cloud?
I think there are quite a few benefits from operating in the cloud, but a big one is really flexibility. And so, particularly as you're growing, if you're looking at scaling up your business or launching new products or entering new geographies, the flexibility that a cloud-based infrastructure really gives you is much greater than you get in, I'll call it, traditional technology platforms. I think that also gives you quite often a greater speed, which again, from a customer experience, means that you can deliver more real-time services and deliver a truly differentiated and unique customer experience in the market. And certainly in today's environment, users expect that from their companies that they're working with, just as they do from, say, their new phone or their new laptop. And I think finally that you often get other features as part of that offering. So you may have been in the cloud initially because of that flexibility and that scale up, but quite often those same cloud providers bring things like built-in security or other features that, rather than going and needing to source that from third parties and integrate, that can kind of come as part of the package. And again, if you're trying to do that and grow fast and scale up, that's a real advantage to being in the cloud and taking advantage of what those cloud providers can offer to you.
How does ClearBank support its banking partners? How have they been impacted by changes in regulation?
We have two primary offerings, and broadly they're orientated towards serving the financial services market and other financial institutions. But that's a really wide range of companies, from banks and building societies and credit unions through to wealth and investment platforms, payment institutions, electronic money institutions, and digital asset companies. And those two primary offerings are a clearing service, so that is access to the payment systems, particularly in the UK, for clearing, so payments, but supplemented by account solutions, including safeguarded accounts for those that require it, operating accounts, segregated accounts, and the use of the virtual accounts on top of that. The second offering that we provide is embedded banking, which is really new in the market and something that is unique in terms of the offering that ClearBank has in particular. And again, there we partner with typically e-money and payment institutions to embed a fully protected, from an FSCS perspective, deposit account directly into an EMI or a PI's end user experience in their platform, where they provide the user integration in terms of that online platform or that mobile experience, offer payment services, but backed by a fully protected bank and that bank account itself. And again, that offering is quite unique in the market. In terms of regulation, there's been quite a lot that's been affecting that kind of financial services market. So if we think about things like the recently introduced consumer duty obligation, that has led to significant change across the industry as people figure out what that means for them in terms of their role, and also how that will affect the products and services they offer in the market. That's been a significant change. We've also seen things like the operational resilience requirements come in and updated outsourcing requirements the last year. And again, those obligations continue for the next few years. And again, those affect all of the financial services industry in terms of the kind of end impact on consumers and improving resiliency and safety in the market. We're also going to see app scam regulations coming in terms of reimbursement for authorized push payments. And again, that will change the industry as people look to grapple with those rules, what it means for them, what changes they may need to introduce as a result, and any impact on their business model. And most recently, we've seen a consultation paper issue that suggests more changes in financial services around very formalised requirements in diversity, equity, and inclusion, which again has been signalled for quite a long time, but this really starts to codify what that means for financial services firms and what they need to do in order to meet the requirements set by the regulators. So there's really quite a lot on the agenda, both things that are continuing from past implementations that are kind of relatively current and that are on the horizon. That's before we look at any kind of net new things coming in the arena of digital assets or stablecoin type regulation that, again, is kind of one of those things that regulators are already starting to think about in terms of what's next for the industry.
What does the future look like for fintechs and neobanks?
I think in the near term, and again in the kind of unstable environment that we see at the moment, with a challenging macroeconomic environment, cost of living crisis, rising interest rates, there'll likely be some more consolidation in the market, as again, many of those fintechs and neobanks see whether or not their business model is really proven out through the various cycles that we've been through. So I can see that. And certainly, in addition to that, kind of in a post-SVB world, what does that mean in terms of how people are managing liquidity risk, how they're making their assets work harder for them, and how they're managing that in the era of social media change? And finally, we're going to likely see a lot of innovation and continued adoption of new innovative technologies. So, for example, AI, and how does the financial services market really look to adopt AI in a safe way in a changing regulatory and legal environment, and take advantages of some of the things it has to offer? As well as I say, the digital asset landscape, which is changing dramatically, both in terms of things that are happening to existing digital asset companies and the way that central banks and government agencies are looking to support and adopt technologies and different ways of working in the digital asset space. And again, I can see that being a big area as people look to kind of move away from more traditional systems of value transfer like the existing payment schemes, and to something that is very different in the market, but with that backdrop of what does that mean in terms of how do we translate what needs to happen today in terms of those rules, regulations, safety, into something that is equally applicable in terms of the outcomes we're looking for in the digital asset space. And again, I think there's likely to be a lot there as banks and other fintechs look to take advantage of the opportunities that are on offer, but also look to grapple with what does that mean and how do I integrate that into my existing organisation.
Thank you, Emma, for sharing your thoughts.
Thank you. It's been great.
You can find all of the chapters in this masterclass series with PPF Group on thebanker.com.